Hello and good morning, folks. We begin another exciting week for the financial markets with another round of updates from our side. This is Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg. Well, the week begins on a different plot as we see some corrections in the USD or the dollar index, as we say, after weeks of trending move with not much corrective action in place. At least the commentaries of the last weeks are pushing for so. We've seen Fed ramping up QT this month onwards, and ECB members were found keen on rising rates further in a bid to reach their 2% inflation targets. Quite a lot of hawkishness was observed in the ECB members. On the domestic front, we had our central bank presence interestingly well while the government made the first disbursement under the PLI scheme of 45 crores to a Delhi based, 52 crores to a Delhi based firm. So it looks like the PLI schemes have started to kick in, and we can expect something on the better side from those fronts. Going back, JK, I would like your updates on these fronts.
Hey, good morning. We are actually starting a week with a sober environment relatively. Dollar is steady. It's not made a new high. Stocks are doing okay. There's been a lot of short covering in the stocks in the global markets, of course, after 2 weeks of fall. And all of this may have something to do with the inflation number that is due tomorrow from the US. And of course, in India, the inflation number is due today. We did have a good rally in the yields as well. In fact, short-term yields have gone up in the US, thus flattening the yield curve further. Now the difference between 2-year and 10-year is down to 13 basis points only. And what is driving the US yields higher is statements again from some of the Fed officials like Larry Summers, of course, whom I very closely follow for any of his statements, says that it directly says that dollar has further to go up, and says that US has a huge advantage in not being dependent on foreign energy at all. And with interest rate differentials, US has a better growth prospects. He is even more specific on the yen, where he says that the intervention is unlikely to be effective with the Japanese policy, which is quite dovish and near 0.0 interest rate policy, and therefore he thinks that the dollar will remain strong. Of course, we also had a few other officials from Fed like Waller also confirming that the US will remain aggressive. US Fed will remain aggressive on the rate hike path so long as the unemployment stays under 5%. And another report says that US inflation will not fall until we reach 7.5% unemployment. So that's a huge rise from the current 3.7%. And ECB members are not left behind as well. Quite a few ECB members have also been speaking. Gelderson, the board member of ECB, and the Bundesbank, that is the German central bank's chief, Mr. Nagel, sounded quite hawkish and called for more rate hikes to de-anchor the high inflation expectations. So all in all, it's a it's a rangy scenario for the dollar now. I think having moved so much on the upside, market is consolidating and reassessing the next move, and also the developments on the energy front, which is the most crucial thing. Of course, oil prices have again moved up a bit, perhaps taking cue from the statement from the European and UK officials that the Iran's latest responses to the nuclear deal raises doubts about its intentions to return to the deal. So this is perhaps pushing the prices higher. And in fact, the move to cap gas prices and oil prices by the NATO is also being seen quite skeptically, whether it will really bring down the prices or whether it is likely to increase the prices due to shortage of supply from Russia. So that is something that we need to watch out. Euro had made a high of 1.0138 in early Asian trade today. That is something quite surprising because it had ended at 1.0050. So possibly there was some impact from news in the weekend saying that Ukraine had gained some advantage over Russia and pushed back the Russian troops in the eastern region of Ukraine. So, so the effect was really very short-lived. And now it is all down to how Europe is going to handle the energy issue going forward. Most of the nations, they say they are prepared now for facing the winter, but what about beyond winter? So the long-term implications of the energy shortage in Europe is what is likely to drive the euro next. And if they do come out with a credible plans to address, then you might be seeing the euro actually bottoming out somewhere below 99 or 98. That's how it looks like, because that is the main driving factor for the euro. Interestingly, on the pound, when there is a lot of negative news about the pound, people talk about BOP crisis and then the high inflation, the fiscal deficit, as well as the lingering Brexit issues. Amid all these, Bill Gross, who is a long-term investor, says investors should be buying the weakening pound, and after it has fallen to its lowest level in 40 years. And yes, of course, this call is coming not at a very bad level, but the sentiment on the pound has not changed. So we really need to watch out if the new regime in the Conservative Party is going to do some magic to get UK out of the hole currently. On the yen also, over the weekend, again, there were statements saying the yen fall on a one-way basis should be arrested. But so far, no action has been seen apart from words. China is closed today. So the Chinese yuan is slightly weaker, trading about 6.94. There's no fixing today as such. So overall, we see a steady market, and I think it should continue for today and tomorrow until we get inflation number. On the rupee, of course, we did have a downward pressure on the dollar on Friday, based on oil price staying below 90 and also the dollar index inching lower. But 79.50 itself gave a very good support, buying coming from various sources. One concern for me on the rupee is, again, a big drop in the reserves by 9 billion for the week ended 2nd September. And we are at 353 billion now. And that is down from 462. I'm only talking of the reserves excluding the forwards. And that is a big drop. My concern is if the reserves continue to deplete further, what would be the policy? Because the depletion of the reserves itself can make the rupee vulnerable. But let's not jump the gun. Maybe the deep oversold or the deep fall in the value of the foreign currency assets in the previous weeks had a lot to do with the reserves falling. If we do see dollar stabilizing, and weakening, then we might see the reserves also stabilize above $350. But definitely, this is some area that we need to watch out. Yeah, that's the update for the day. Thank you.
Okay, wonderful, JK. And yes, folks, we should be waiting or getting new updates on the inflation front for our domestic or the domestic economy or the Indian economy today, while we also expect the inflation data for the US economy tomorrow. So these two important updates are going to be watched quite keenly by the market participants, and probably the markets may remain steady till that particular time. On the other hand, yes, we have seen all the central banks keeping inflation as their focus, as the lesser devil of recession is being put on the sidelines, while the bigger devil of inflation is looked to manage with their limited ammunition, trying to kill the demand for the inflation to come down. What we have also seen is the Indian Central Bank intervening with significant amounts of flows, while absorbing or reducing the volatility in the markets by the significant drop in the FX reserves that we have been observing. So it can be an area of concern, as JK mentioned, but by far we've seen our central bank acting quite well. So let's see how things go about, and we'll see where inflation comes up for the domestic economy as well as US economy tomorrow. That's it for today, folks. Thank you so much for listening. We'll come back again tomorrow.